There's so many different questions around go-to-market investments. Almost every company gets it wrong right now. They use the wrong data and get led to the wrong answers.
Chris Walker is a visionary entrepreneur, investor, and the force behind Refine Labs.
In just 3 years, he scaled it to 8-figure.
As the host of the Top 100 podcast,
he's shaping the future of B2B growth.
Chief revenue officers and CMOs oftentimes lack financial acumen, the ability to do FP&A. And on the finance side, you have people that really understand finance, but lack the practical experience of go-to-market. So you have two functions that have important independent skills, and all the problems lie at the intersection of these two functions.
Why do you think for so many people it's broken, that we struggle to get the go-to-market engine going?
So you have a whole generation of C-level executives that have never been asked by investors, by executive teams, about how do we measure unit economics and deliver an efficient go-to-market process, weighed down by the 10 years of nonsense that marketing leaders and sales leaders have been taught and executed for the past 10 years. And I think people with fresh eyes would see the flaws. Maybe you're not going to be the expert in how to run advertising, but when it comes to measuring the return on investment, I think that you could be the function that changes this for the company.
Finance pros, this is the event you don't want to miss. The AFP FP&A Forum, March 17th to 19th in Austin, delivers sales-free insights from top finance leaders. With 18+ expert-led sessions, you'll gain actionable strategies to drive your success. I'll be there. Join me and hundreds of our peers. Learn more at afponline.org. Hello, everyone. Welcome to FP&A Tomorrow, where we delve into the world of financial planning and analysis, examining its current state and future prospects. I'm your host, Paul Barnhurst, aka the FP&A Guy, and I'll be guiding you through the evolving world and landscape of FP&A. Each week, we're joined by thought leaders, industry experts, and practitioners who share their insights and experiences. This week, I'm thrilled that we have a guest that's an expert in go-to-market and is going to be able to share some real great insights with us today. So Chris Walker, welcome to the show.
Paul, awesome to be on the show. I got to say, this is the first true finance focused podcast that I've been on, and I've been waiting for this day for a long time because I feel like I have a lot to offer to this audience. I know a bunch of people in the audience right now, especially CFOs and higher level finance people, are wondering, how do I understand the impact of my marketing investments? Where should I spend more? Should I spend less? Where should I spend it on? Do we have too many sales reps? Should we have a SDR team or not SDR team? There's so many different questions around, go-to-market investments and the performance of those investments. And frankly, I believe that almost every company gets it wrong right now and leads them to they ask the wrong questions, they use the wrong data and get led to the wrong answers. So looking forward to sharing my perspective.
I'm going to love to dig into that. I thought it was as simple as just hire more salespeople and there's always market.
Good play, yeah.
Yeah, I've seen more than one company do that, and I just always shake my head going, maybe a little more strategy here. So just a little bit about Chris, give you a little bit of his background, and then we'll jump into go-to-market here. So Chris is focused on building an ecosystem of complementary, highly specialized B2B go-to-market technology and managed services. He's shaping the future of B2B go-to-market strategies as the CEO of Pasetto and the executive chairman of Refine Labs. So one question we like to ask all our guests, I'd love to get your take, because I know you have a little different perspective than a typical finance person. For you, what does great FP&A look like? If you're in a company or you're looking at FP&A, how do you know it's great FP&A? What does that mean or look like to you?
I've been the CEO of a $20 million business for a while, and we had a small, finance and FP&A team in the company. And so for me, sitting in the CEO seat, the best part about FP&A was, and what I'm looking for is, how do we figure out how to deploy investment strategically to be able to achieve our business objectives, which is not only growth, and having finance people professionals that can do more than just dump, ideas or numbers into the Excel model and tell us what comes back, but have a perspective on the actual decisions and the strategy and why we do things and how to prioritize them, and we're spending more, spending less. I think that's what basically everyone is craving from this function. And I work with these people frequently now. And I think there's so much talent and so much skill and so much untapped potential that could be added to not only go-to-market, but the entire company, from the FP&A function and the finance department broadly.
No, I appreciate that. Yeah, definitely as a CEO, I'm sure you see a lot of it helping with those investment decisions. So thing you mentioned there is a lot of untapped potential. Can you elaborate on that? What do you mean by that, or what are you seeing that leads you to that conclusion?
So I'll focus on go to market for right now because that's where I understand the best. And so I see this angle from two sides, right? So half of my customers, the CFO and CEO, bring us in, and the other half of customers come from the CMO or the CRO, and all roads lead to us working with both of them at the same time, but the entry point is different. And when you look, you have chief revenue officers and CMOs that have a ton of experience in their specific specialty and function, and oftentimes lack financial acumen, the ability to do FP&A, the ability to understand a portfolio of investments and how to scrutinize those investments. So they have great go-to-market and very little finance. And then on the finance side, you have people that really understand finance and really have tons of skills in modeling and looking at investments and being able to build that stuff out, but lack the practical experience of go-to-market to be able to properly weigh in and say, this model is wrong, we're going to do it this way.
Of course.
And so they rely on whatever the CMO and CRO feed them, usually from a model or what they hear from Gartner or some conference or something like that. And so you have two functions that have important independent skills, and all the problems lie at the intersection of these two functions. And what are the problems? Slower growth, higher cost of acquisition, lower enterprise value. Those are the core problems that are facing most B2B with SaaS and tech companies right now. And it's the most painful, expensive problem in a B2B company today. And the reason is because go-to-market investments in a B2B tech company are somewhere between 30 on the low end and 100% of revenue for some companies that burn. And it's by far the biggest expense on the P&L, way more than product development usually, and way more than R&D. And so when it comes to where is the opportunity to be, and then go-to-market for the most part is also the driver of growth outside of product. So you have growth and CAC and efficiency on getting net new ARR, and you put those two things together, and those are a great indicator of what your enterprise value multiple is going to be. And there's a ton of many people have done that study. You have a 5-year CAC payback versus a 2-year CAC payback, and you look at public market companies. The difference in the revenue multiple could be, a 10x for a low CAC payback period on revenue and a 3x for a high CAC payback period. So we're talking billions potentially of dollars, even hundreds of millions for a middle market or lower middle market company that are on the line here.
Yeah, I mean, it makes a lot of sense, right? I mean, if that CAC is really attractive, you're going to get a much bigger multiple because your revenue's worth a lot more. You don't have to spend near as much to get it if you're keeping those customers. So I get it. What I'm curious is, right, you mentioned how, hey, you got the great go-to-market, you got the finance. What can FP&A do in this discussion to kind of better help go-to-market with the knowledge that many of them don't have that go-to-market knowledge? Should FP&A people look to learn more in that area? I mean, how do they challenge? What do you recommend to make it, to maximize that relationship?
I think that, and I don't know enough about this, so I might be speaking out of turn here, but I know that a chief revenue officer and a chief marketing officer are very accustomed to using part of their budget to hire an advisor, consultant, expert to help them and look from the outside and help them understand things and make better decisions. I think the CFO needs the same thing related to go-to-market, and they're not getting it from RevOps. They're not. RevOps doesn't really understand. They've never been a sales leader before. They've never been a marketing leader before. They've never been a finance leader before. But all of a sudden, this tech admin specialist is responsible for telling all these C-level executives what to do. It's just a total mismatch between skills and experience and job role responsibilities or expectations. And so I think that finance, that's what my company does in a lot of cases. We advise CFOs around how they're measuring their marketing investments, what their model looks like, what the top level KPI should be across the go-to-market, whether those things are going up or going down, what that means, how they should think about planning, what the holes in the plan are. And we've just seen it with a lot of companies. And so that experience can be really helpful to be able to bring in, and many other C-level executives will use something like that. I'm not sure whether CFOs do that frequently or not.
Yeah, I mean, I think there's times, but yeah, in general, I don't think we ever brought in an expert to look at any of the stuff that sales gave us. We sat down and worked with them, and we had the conversations, and they may have brought someone in, but I can't directly think of finance really bringing somebody in on the sales. But I get what you're saying is being able to have that voice that can really kind of look at it and speak to it beyond just, hey, I can look at the numbers, I can run the model, I can do all that, but do I really understand enough to weigh in here?
if you really look at the root of the issue, the framework and the process is the problem. It's the way of thinking that then drives what data do we look at, why do we look at it, what decisions do we make from it. It's actually that part that's the broken part. And it's very difficult to be able, because I went to a CMO, CRO school event last week just to see what are these people learning about this stuff. And they get taught, oh, what we should do is we should try to divide the credit between marketing and sales and SDRs and partners, and we can plan our revenue and we can analyze our revenue and ROI based on that model. And that's what every C-level revenue leader is being taught right now. And it is the number one problem of go-to-market dysfunction, because those departments each do completely different things in what I call a revenue factory. You have the people that put the wheels on the car, you have the supply chain, you have the incoming inspection. These people are doing different things in the factory, measuring them all the same way and saying these people are good at this thing. And these are the only people that made this car. No, everybody helped make the car. And so the way that they divide credit based on the department is the root of the problem. It's the perpetuated problem. The reason that they do it is because finance only tracks by GL code and what department spent the money. So it's the only way that they can go back and scrutinize the investments about which department spent the money. And we need a much more sophisticated, well thought out way to look at why are we spending this money? What is the purpose of this money? We want to know who spent it, obviously, but that is the least effective way to try to decide whether these investments are effective or not.
Yeah, so let's jump into that. You got to go to market team, you got finance. You're the one who has to measure all this. Ignore the GAL, throw out the P&L, whatever traditional method you want. How do you recommend? I mean, obviously a lot of people use attribution. I know you've talked about that. Some use KPIs, but how do you think that should be measured to make sure you know how performance is going and you can really hold people accountable?
Yeah. So just to be clear, attribution is the means to get to that number of which department did it. So the whole thing is based, and then with attribution, you can say, oh, marketing did that because they came through our website, and then underneath that, you can try to say our Google ad did it, right? So that's the objective. But at the top level, they're trying to divide it by department, and then once they divide it by the department, then they see, oh, like marketing missed plan by 7%. And then when that happens, then they look in deeper and then they scrutinize the marketing stuff.
Yeah, exactly. Go down and look at the Google and okay, Google brought us this many leads or whatever. Or we went to
exactly.
This trade. Yeah, I've done all those analysis before. Where
precisely. Yeah. Yes, exactly. So I have myself as well. And I think over time, I've just figured out better ways to do it. So that's all I'm sharing here. Like none of the things that I'm talking down on, I haven't done myself, just to be clear. And so the way that I like to look at it is, first off, the department level structure is the wrong set. And the reason, if you narrow in on the problem, the actual problem is that a company can easily manage and measure from when the opportunity gets created by sales until when it gets closed won. You can build an easy financial model. You can say, this is our PRP, what the conversion rates need to be. Every finance team can do that. The root of the problem is that everything before the opportunity gets created, you have no visibility, no data, no framework. And what actually happens is that the amount of pipeline that you need to have appropriate quota coverage to manage that process, you don't get enough of it. And that's why your sales team has a lower quota coverage. And the reason is because you don't have visibility in a process to measure that thing in the same granularity as you do from opportunity to close one. That's really the problem. And when you look at the marketing investments, or if you look, I like separating it more based on, if you think about it like a revenue factory and setting it up based on the stages of the factory, then we think about it as you have part of the factory, which is called pipeline creation. You have another part of the factory, which is closing the pipeline. You have another part of the factory, which is renewing customers. And then you have the last part of the factory, which is expanding accounts. And so there's a 4-stage simplified process. And then underneath that, we actually break it down into 9 stages in our like more complex model. But let's start with the 4 for now. And so when you look at creating pipeline, part of creating pipeline doesn't fall into typical marketing budgets, which is called prospecting. And prospecting for 60-70% of companies is owned by sales, but is really part of the pipeline creation process. And they want to do it because, if we train our BDRs, they'll become our future new reps and we'll have a pipeline of people. That's why they go under sales. But it creates this total misalignment between the pipeline creation engine, between the marketing and then the SDRs falling under sales. And from an investment standpoint, then you have the SDRs trying to go out and get pipeline so they can get credit for it against the marketing stuff so that they can get credit for it. And you have this credit fighting between SDRs and marketing that's totally useless and unproductive and doesn't help you at all as a C-level leader to look at the data and make a decision about what to do after that. And so I just think that whole thing needs to get thrown out, and I'm providing the solution for it. So anyway, whether you organize with your SDRs under sales or marketing, it's a pipeline creation expense that should go with many of the marketing expenses. But inside of a marketing budget, there are tons of different things that you spend money on, and they all have different objectives, time horizons, purposes. Let me just break down a couple of examples for you. And we analyze this in a bunch of companies, and we break down every single line item down to like the $30 receipt at a trade show for a couple of drinks. Some money that you spend in marketing will go to your user conference or to customer marketing, and it'll be to increase expansion and renewal, right? So we can't measure that, or we shouldn't measure that against pipeline creation. Part of it might go to analyst relations and thought leadership and messaging and sales enablement and things like that actually have benefits across the whole customer lifecycle. Being in the top of the Gartner Magic Quadrant impacts renewal and retention arguably more than it does new logo acquisition. And so those investments also should not be scrutinized against pipeline creation. Then inside of it, then you have advertising and different strategies around advertising. Most of it is lead generation, but some of it could be for brand building, as people will call it. And then you have your event things, and some events are for leads and other events are for brand, and none of those are really defined within the investments or things like that. So you have this, the point I'm trying to make here is that you have all these different investments with all these different purposes. And then what everybody tries to do is say, oh, now we just put one model against this and say, and that model is going to tell us what things are working and what things aren't. And I'll give a great finance example for these people. What is that pipeline creation investment, that set of investments? It's just like an investment portfolio. And some of your investments are for growth, like you bought the NVIDIA stock. Hopefully you didn't buy it yesterday, 2 days ago or whatever before it went down. But some of the investments are for growth and for value. And you're going to buy it and you're going to hope the stock goes up, and you're going to measure the success of it against whether the stock went up or not and how much you gained. Other investments are going to be for dividends, and you're going to buy it and you're going to say, did I get my 5% dividend or not? Or what was that? Some of them are going to be for risk mitigation. You're going to buy it to diversify your portfolio and mitigate risks. Other things are going to be like massive, like a penny stock or like cryptocurrency. And it's going to be like this one little investment, if it pays off, could make the difference in our entire company and value. And if you took all those investments and you said, no, I'm just going to measure them against whether we got our dividend or not, that's what you do in scrutinizing marketing investments right now. And so what does that do? It pushes all the investments to one category called lead generation and performance marketing. And then all the investments get measured off that, and then you apply your multi-touch attribution models and all the different stuff on it, and then you sort it by department, and the whole process is broken. And so the first step is acknowledging we have different investments, just like a portfolio, and those investments need to be measured in different ways, and one blanket model is not going to be our solution.
Yeah, I mean, that makes a lot of sense. I like the portfolio analogy, and I get what you're saying. I do marketing with different vendors now as part of my business, and often have that conversation. Look, if you spend money on this type of advertising here or on this influencer marketing, it's really brand awareness. It's not primarily lead gen. If you do something here, this is really designed to be lead gen. You're going to end up with those emails, and trying to help them understand that, not every marketing dollar is going to go to lead gen, depending on what that activity is. And definitely that's something I wasn't near as aware of when I worked in FP&A. I understood the basic ideas and I got it, but I have a much greater appreciation when you're actually having those conversations now with vendors and you're seeing it. And you're like, oh, yeah, there is a lot more to this than just throw that attribution model on it and away we go. And so, I'm curious. Obviously, you've worked in this for several years. Why do you think for so many people it's broken, that we struggle to get the go-to-market engine going? Obviously, you said, hey, I think we do a lot of the reporting wrong, but what do you think is the root problem? Why do you think this happens? How do companies kind of, step back and get this engine going better? Because it's a common problem everywhere. Yeah, we just didn't sell enough. Okay.
Let's break it down just for reference. Most of my experience is in, venture or private equity funded tech and software companies. Okay. So basically, if you go back until most people started their career, all .com bubble, all the way to mid 2022, that whole time, No revenue leader was ever asked about unit economics. They were never asked to measure the effectiveness and ROI. All it was get the result. How much money do you need to get that result? And then the CFO and the CEO will figure out how to raise more money in 18 months if that's how much we burned. And so you have a whole generation of C-level executives that have never been asked by investors, by executive teams, been taught at schools or anything like that about how do we measure unit economics and deliver an efficient go-to-market process. Never. And on the finance side, all finance was responsible for was trying to figure out what is our CAC right now. And then it was a much easier time pre-2022 to go back and raise money every 18 months. And so the finance team has never been asked or driven to do the same thing. And then a big thing happened in the middle of 22, if you haven't heard, called SaaS Winter, when the valuation of tech companies dramatically changed. Salesforce stock bottomed out in December of 2021, and then it took 6 months to trickle into the private markets. The faucets shut off for venture capital and private equity, and companies were forced, okay, we're not going to be able to raise money in 18 months. We need to figure out how to stop burning 10, 20, $100 million a year, whatever the number is based on the scale. And so they have to figure out, okay, now how do we get more efficient? And I put that in quotes for the listeners, okay? And then for the past 2 years, companies have been lowering go-to-market costs. They've been cutting costs. They've been improving EBITDA. They've been getting more profitable, but they have not been getting more efficient in go-to-market. And go-to-market efficiency gets measured on the difference between go-to-market expenses and the total net new ARR that's gained, which becomes a ratio. And if you look at the 80 publicly traded software companies that are tracked on this metric, that number is still going up. It's been going up since the middle of 2022, and it continues to go up today. And if you look at the private markets, it's even worse. It's the same trend, just more dramatic and worse. And so cost cutting is not a path to go to market to getting more efficient, because what they're doing is just blanket cuts across, okay, we'll just cut 20% of sales and we'll stop doing 20% of events. And they're not being smart and methodical around what are the lowest performing things across the whole thing that we should cut that have the lowest return in our portfolio, and how do we keep doing all the stuff that have the highest return. And so the core issue is that nobody's been forced to do this up until the middle of 2022. And the people that are now trying to teach and address this solution are just the people that worked at the companies that happened to be successful 7 years ago. And they're just teaching, oh, this is what we did before HubSpot IPO'd. It'll work for you now. And they're perpetuating outdated, ineffective knowledge. The investors do the same thing. The investors go back and say, oh, let's just keep doing the same marketing strategy or the same KPIs that we had with my company that was the unicorn. And they bring that from 2017 into this 2025 Series A company. And the technology vendors that are deeply integrated into the stack have no vested interest in changing the total quality of their product. It would be way better for them to continue to be more profitable and the world to stay the same for their business to work. And so they're not incentivized to totally reinvent their product and figure out how to bring in finance data and blend all this together and then retrain the entire market on how to do things. The job that I have is hard. Nobody wants it. Sorry, I don't know if we're supposed to swear on this podcast.
You're all right.
Is super hard, meaning that I take something that everybody needs that nobody wants. And that's what I'm telling people right now. And it's way easier to just find something that people already think that they need and think that they want and just sell them that stuff. And so that's what most people are doing. That's what most people do right now. But the core of it is that nobody's been forced to do it until 2022. And now at this point, it's only been 2 years. Like I think we're the farthest ahead in the game that there is. And it's almost like you have to be a brand new startup to do it from a technology or advisory standpoint. Otherwise, you'd be cannibalizing your existing business to switch over to this model. And just enough time hasn't played out. And if you are in one company, a sample size of one, let's say you're a CFO or a CRO or a CMO, you do not get the reps and experience across a lot of companies to see the patterns of the things that work and the things that don't work across a lot of companies. So all you do is get the sample of if it's working at my company, and then you attribute it to the model or the things that you're doing, which is unlikely to be the reason why you're successful. So it's a complex situation.
Tired of sitting through sales pitches designed as professional development? Same here. That's why I'm heading to the AFP FP&A Forum March 17th and 19th in Austin. where it's all about real, actionable insights. We're talking about AI, process efficiency, strategic planning, finance communication, practical takeaways, no fluff. Just ideas you can actually use to drive results. I'll be there too, leading the session. Amp up your scenario planning with Gen AI. If that's a topic you're excited about, let's connect. Join finance professionals from across the map at the AFP FP&A Forum, where the only agenda is your success. Head to afponline.org and use code FP&A Guy 2025 for $200 off. See you in Austin. Yeah, no, and I get what you're saying. Definitely the 2022, 2021, as all of a sudden money was no longer free. Interest rates all went up and the whole market shut down. And right, I think all we heard is all of a sudden, instead of grow at any cost, now you need to balance growth and cost. And especially in SaaS and tech, that was something a lot of people didn't know how to do. So you'd go to those that had done it, at least got it public or showed good numbers and implement those models versus, hey, somebody's really done all the scientific studies, dug into this, and there's this logical playbook that makes sense.
It's difficult to find somebody or a group of people that have deep expertise across both of these things.
Sure.
I've sold $40 million worth of deals. I've run probably some of the best marketing in B2B marketing that drives that $40 million in sales. I've run the FP&A. I've not been the finance director. I've been the CEO of a company that's $20 million inside of the P&L every day, planning and managing that stuff. It's hard to find somebody that has all that level of experience. And then secondarily, it intersects between these two functions, which makes it very difficult to sell to a company and very difficult for a company to do. And so there's a lot of interesting business reasons why people aren't solving this problem.
Yeah. And so talk a little bit. I mean, obviously you're trying to solve this problem. Talk a little bit about the two companies you have, because I know you're trying to say, hey, I really want to fix this go-to-market problem. So maybe talk a little bit about kind of what you're doing in your companies to help solve this problem. I'd love to kind of know a little bit there.
Yeah, I think some people might find this interesting. Ever since 2017, I have been somebody that says I'm never raising venture capital, especially early stage. Maybe I'll take growth equity and take secondary at some point, but I'm not riding the VC train to be a unicorn. Because I just worked in those companies and said, the culture sucks here. The companies don't hit their targets. The cap tables are underwater. That stuff was happening in 2015, 2017. And so I just didn't do that. So I decided I'm going to build tech companies in a new way. And the way that I decided was, number one, I'm going to build a managed service or professional services business that works with these companies, characterizes the problems, understands the problem deeply, solves the problem manually, generates cash flow and enterprise value, and then using that asset to then fund the product, which I just did all the R&D on inside of the service business. And so my first business, Refine Labs, was a demand gen agency and analytics agency. And we work with, SaaS companies that are between, 10 million in revenue and $1 billion. And we have different services for the different sizes and stages. And we do advertising and content creation and the measurement of that advertising and CRM and data analytics. And that company is an 8-figure revenue company. We have about 45, 50 employees. And my business partner runs that business as of January 2024. So Megan Bowen, my business partner, has taken over as CEO of that business so that I could work on my passion, which is this other business. And then I started Pasetto. I've been working on it in the background for several years, but in January 2024, we officially launched it. Being a bootstrapped smart company, the first year of the company was as a consultancy. So we were a consultancy, and then we, took the data in spreadsheets, and we took Google Sheets, and we asked for exports, and we put them all together, and it would take us 3 months to come up with conclusions. And over time, we figured out, here's what we need to ask for, here's what tools we integrate with, here's how we process it, here's how the database works. And now we have an MVP product, and we're positioned as an advisory service that's enabled by technology. And then in the next 6 to 12 months, we'll be a pure product play where our customers run and use the product on their own. And so that's the product. And what does that product do? It does top level go-to-market analytics. You can create and standardize data. So it takes your expenses, it standardizes all the expenses into our proprietary taxonomy. It takes your CRM data, does the same thing, blends all the data of expenses and revenue by customer and CRM data all together, produces you top level analytics in terms of like your cost of growth, your growth rate, NRR, cost of acquisition. But then the valuable stuff for the finance team is going a level lower and looking at the investment allocation across the customer lifecycle, the ROI of those investments across the customer lifecycle, and being able to give the whole executive team one place to look that says, this is how we decide what things are working and what things aren't. Where right now, marketing's got their own deck for the QBR. Where does that deck come from? 7 different micro tools and reports that don't have expense data, accurate finance data. It rolls up to marketing. It goes into the QBR deck. None of the data works. Nobody trusts the data is a better way to put it. And they shouldn't. It's made by manager level people that don't have the right acumen or visibility to draw those conclusions or make those decisions. And so I figured out a long time ago that executives need a stream of data that they can use to make decisions, which should be fast, easy, and simple, and easy to get alignment on across the team. And right now, the bottoms up manual reporting structure, or even if you try to do it with AI, garbage in, garbage out, it doesn't matter who's doing it, whether it's humans or not, you're gonna not have the right right process to draw the conclusions. So I'm trying to help executives be able to have the data to get aligned and make smart, easy decisions.
Yeah, so it sounds like, obviously, as you mentioned, started consulting.
Yep.
You've got the MVP, and you're looking to release a product that really kind of takes all that data and allows the company together to really understand go-to-market, where they're looking at it in a similar way and they're seeing the data the same and the analysis and the reporting, so that you don't run into the conversations. We've all been there. You get in a meeting and everybody has 6 different numbers for CAC.
Yeah, that would be one of the easiest problems to solve.
Sure.
Yeah.
I like to start easy.
Yeah, same. Yeah, when we integrate with CRMs like HubSpot and Salesforce and Sage and Suite and NetSuite Intact, things like that, bring all the data in, process it. And really, I think part of it is the separation between the data and information that C-level executives need to run the business, change strategy, allocate millions of dollars in one direction or the other, versus what a manager level needs to be able to optimize their SEO strategy to get 1% better every month or every quarter. And right now, those two things somehow get blended into one set of QBR decks and reports. And it's really 2 different streams. You have a strategic transformational data stream that executives need, and most other people in the company shouldn't have access to it, from my perspective, I'm being honest. And then you have a tactical stream that people should use to make incremental, ongoing improvements to the things that they're doing. And the executives don't need to see that stuff.
So I'm curious, you talk about this platform, is that this tool would kind of have both those, the tactical and the strategic? You're trying to kind of show both those data and separate them? Or how do I think about?
Step 1 is just acknowledging that they're 2 separate things, that right now most people blend into one. So that's the first step. At the moment, because there's a ton of tools at the bottom, they're going to, your campaigns, everyone plays in that little space. Nobody plays to build for the C-level executive. So we just see the opportunity to build there. And so, yeah, we're building there. And then the difference is most tools try to go build bottoms up, campaigns, campaigns and attribution and touch points, and try to build up to the top. And that process never works. And so we've just, come up with this crazy innovative idea to try to build from tops down. And then as you build down, you just get more granular, but all the data levels back up to the top. And all it starts with is growth rate and cost of growth, those 2 metrics, which cost of growth, just for reference, it's like CAC, but also includes the expenses and revenue that come from post-sale and expansion. And then can get broken down between new logo and expansion at the next level.
Yep. And so kind of, stepping back a little bit, we've talked a lot on go-to-market. And let's say, somebody's new in this area. You get a lot of, FP&A, switch industries. I remember my first kind of SaaS type company. What would you say to them as they're somebody going into that situation? Any advice as they're trying to understand go-to-market and just get to know it better? So not necessarily advice on getting into the deep metrics, but what are some things they can do to start to understand go-to-market if they're put in that position, and just educate themselves so they can have those more intelligent conversations?
So I'll offer a couple of different ideas, and all of these ideas I've done myself. And maybe they were 5, 7, 10 years ago, but they're still just as valuable today. And this could apply to the people that are listening to this podcast, but really can apply to anyone in the company. Who wants to operate at a more strategic level. So number one, a CMO should do it, an FP&A person should do it, a CFO should do it, a CEO should do it. Be your SDR for a day. What are you going to find? It's a total waste of time. Most of the people you talk to are total garbage. They don't want to talk to you. They said, I never filled out that form. And then you can find the patterns. Where are the people that are good that come from? Where do those, and you can play the role for a couple of days. It took me 8 calls to realize that everything that was coming in the company I did this for, 8 phone calls to that connected to realize that all the stuff that was coming from marketing was total garbage. Because people said, I don't remember filling out that form. I don't want to talk to you. Then you call a couple people that come from certain places and they say, oh yeah, I was really interested in your stuff. And you can see the pattern and you can play the role. And like that alone, I am so surprised that most CMOs have never done that. Most CROs do not do that. And if they did for one day, they would realize find a lot of the problems that exist in their go-to-market engine right now. And a finance leader, you want to build credibility when you go to the table to go and have that discussion around the effectiveness, go do that for a day, and then you can speak to your experience around it. I think that's a massive unlock.
I love that one. I found my FP&A people were much more effective when I had them sit on the phone for a day. It might have been a call center, might be with the SDR, salespeople, try to figure out a way to go along on a ride for sales, somewhere in that area. So you at least start to get appreciation, a little different than necessarily sit with the SDRs for a day. But that idea is just invaluable of go sit in their shoes and see what's going on.
Sure. And I don't really, because some people do this of, we want to have empathy for our SDRs because their job is so hard. That is not what we're after here. To see how broken the system is, to listen to what your customers say, to look at the data and find that's what we're really doing for here. Everyone's like, I just sat I did a speaking event the other day. And it was the 30-minute presentation of here's what our SDR team does. Their job is so hard. They have to call all these people and they're building the pipeline and good for our SDRs. That's not what it's after. It's to look for the problems. Another thing that you could do, I've done this as a marketer and it goes in the same vein. So maybe if you tell me if it's redundant, we can move on. But go and visit your customers and go and pick the ones that are either on the verge of churning based on your data or have already churned recently, and go and visit them in person at their place of business. I know a lot of people are remote. If you can go in person, especially not everyone sells to remote tech, right? Manufacturing facilities, financial service. There's a lot of people that still go to an office. Go and visit a couple in the bottom 5%, and then go and visit a couple in the top 5 or 10%. And see what the differences are. And then you can weigh in on ICP, you can weigh in on why people are leaving, why people are staying, why people love you, what are the things that are working, what are the things that are the same about the people that are good and the same about the people that are bad, and have a way more greater perspective on that. I think that's also a really big one. If you notice the pattern, it's having finance people start to do the jobs of go-to-market, or at least get exposed to the jobs. And as an outsider, all those people think this is normal, right? They're in there. This is what we do in go-to-market. As an outsider, you can go in and say, what are we doing here? Like, this doesn't even make sense. And so sometimes just a fresh set of eyes can be really valuable in going over in that direction. And you don't have to be a rocket scientist to look at them. The problems are very obvious to see. And most of it are stem from a misalignment between what the company does and what the customer wants.
And it so often is, right? Misalignment. That's almost always a problem somewhere down the line. You're not aligned, and that's why you have a problem. But I really like how you said, do it not, from an empathy. Obviously good to have empathy, but do it from a what's broken, what's not working, what is working. Really analyzing it from what can I learn about the process and where it's effective or where it's a waste of time. Like you said, you might be getting leads through your website, and those might be pretty good. All the other ones coming from these events might be total waste. And you're going to know that 10, 15 calls. Oh, the 3 I did came from, like you said, came from this area, and they actually talked to me. The other 12 told me to buzz off. Like, there's probably something to this. Let's dig in a little further.
Yep. And it's like, you can eventually you might have large scale data that tells you that story, but you can literally figure out in one day just doing that.
FP&A Guy here. and I want to tell you about the Planning and BI Showcase. Gone are the days of juggling multiple platforms. Now with business intelligence tools, you can integrate planning directly into your BI system, the same system your entire company already uses. Join me on March 20th for the Planning and BI Showcase, where industry leaders will demonstrate how top BI tools are reshaping strategic planning. See firsthand how modern FP&A solutions can drive real value across your enterprise. The event features live demos from leading BI solutions. Whether you're a CFO or an FP&A professional, you'll discover the tools that can help you deliver more value across your enterprise. Don't miss out. Register today at www.excelevents.com/e/planning.in.bi.showcase and take the first step towards smarter, data-driven decision-making. Yeah, it's amazing how often talking to people will help you realize a problem quicker than the data will. Because
data is more of the data is always a confirmation of what you experience in real life qualitatively. It should be. Should be.
No, it totally makes sense, right? If you know a business is doing really, really well, when you get to P&L, you should be able to see that. It should be a confirmation of that. If it's not, you're like, okay, either I didn't understand something or the numbers are wrong. And you go talk to the accounting person and hope the numbers are wrong. So that makes a lot of sense. So we'll talk a little bit. Also, I know you've done a lot of kind of content creation. You talked about your prior business and some of that. How do you see just the content side of marketing? How does finance kind of weigh in to make sure it's being used well, and think about, like, some companies say, hey, we should do all content marketing, or we should do all events, or all, SEO or paid. How does a finance person look at that, and outside of just saying, hey, here's the returns, here's what we think is going to happen, and kind of sense check it and go, yeah, this makes sense. Okay, I think a content strategy is right here. Any advice on kind of how to make sure you're having good conversations with marketing versus either just rubber stamping it or saying, hey, I just want a better return? Because that, we really want to be advisors.
Well, we're going to open a big can of worms here, so we have enough time.
I'm kidding that. I like can of worms.
Okay, cool. So first off, content marketing is an incredibly broad term that encompasses different distribution channels, mediums, formats. And so, like, just saying, should we or should we not do content marketing is not the right question. And then the second part of it, and I'll get into this a little bit, I also believe that marketing is a terrible categorization of that function and objectives, which include short-term and long-term brand building and lead gen, tactical and strategic, and vision and story and science, and it's all over the place. And so I'm recommending not necessarily an org structure change, but instead a mindset and thinking change around the subcategories that go into the marketing department, or what I'll view now as the pipeline creation team.
Yeah, the four buckets you talked about before.
That's actually quite a little bit different there, so just stick with me here.
All right,
yeah, I wouldn't bring us down the same road. So part of it is what I'll call business strategy. You have product marketing, messaging, positioning, competitive intelligence, sales enablement, analyst relations, PR. You have all this different stuff at the top, which is a lot of art and messaging and has an impact across the entire customer lifecycle. So you have that part of it. And then you have demand creation, which is we have these target accounts. We want to get them, we want to shorten the time between them and them being engaged with our company. So we're going to go out and get them, whether it's through outbound advertising, we're going to get that and shorten the time. Then you have the supply chain, which is getting customers, no matter where they came from, a qualified customer that comes and is ready to be prospected by the prospecting team. And ideally, high quality signal, high quality account. Doesn't matter whether it came from ZoomInfo, your website, an event. Just put finance people should get this. Marketing and sales leaders don't get it because they've been playing the credit game for way too long. Just put them all together. Who cares whether it comes from ZoomInfo or your website? We want to have that data so we can make better decisions long term, but it's not for crediting. And then lastly, you have the prospecting engine. Okay. And so the reason that I say that is because content falls across all those different things and has different objectives across the things. And so it's more about deciding what is the purpose of this content, than not is it a video or a post? Did it go on LinkedIn or a podcast?
Sure.
It's not about the channel or distribution or the medium. It's being really critical about what are we trying to do with this thing. Okay. Sometimes it has, sometimes it matches the channel and there's some consistencies there. But the reason you run a LinkedIn ad, there's a million different reasons that you could run one. And the medium and the format and could be different than organic and things like that. So when you think about content, the way that content breaks down is in three different areas. The foundation is the message and the perspective. Like, what are you saying? Is it valuable? The strategy. If you say it, even if you put it in a beautiful video and you put it on an ad where everybody has to see it, if that sucks, nobody's going to care, right? So that's one place where it can break down. The next place it can break down is in the format, right? Like maybe we take this podcast and we translate it with AI and we make it a blog post that is 1 trillion miles long. It's the same information in the wrong format, and the format is why it breaks. And then lastly is you have the distribution, right? And then now we have this video, and maybe if this video was like perfectly cut and clipped and me and you here looking so good and we put it on LinkedIn perfectly on organic and it just hits, like that's where it's meant to be, and matching the format with the dynamics of the distribution channel. And so you can see the pyramid of like, if you break at the bottom or you break at the second layer, it doesn't matter what you post to the top. And then when you think about that stuff, like you could put it on your website, on LinkedIn, through your email, do a live event like this, whether it's people live or your post recording, all the different social channels, is it paid or organic? When you look at the permutations, there's hundreds or millions. And so the thing that I think finance people should be able to weigh in on, or at least my perspective on this, is that we should not be scrutinizing the ROI of the content. We should be scrutinizing the ROI of the distribution channel. And so instead of saying, did this video have a good ROI on LinkedIn? It's saying, does LinkedIn have a good ROI for our business? And then we happen to put the gas on the car, which is the content and the videos. And then the videos cost money, include that in the cost of running it. And then you have people that post the posts and run the ads, and you have the ad costs, put it all together and say, does LinkedIn as a whole deliver appropriate ROI? And then if it does, great. Let's use the data to figure out how to make it better. Maybe we should do a little bit more paid. Maybe we should scale back a little bit. And if it doesn't, then you have to decide, is this channel viable or not? And if you're far away, maybe it's not, or maybe you suck. And if it's close, then maybe we just need to change a couple of things and make it better. But I think what people get caught up is they say, what was the ROI of that ebook that we made? And in reality, they send the ebook out in an email and they do it in LinkedIn ads, and then there's all over the place. And so I like thinking more about the distribution as like the main mechanism that we're scrutinizing the ROI against, not an individual message or content or campaign.
So really kind of understanding the distribution channel and how the ROI is for that channel. So your maybe email as a whole as a channel, or TikTok or YouTube, or social media in general versus trade shows, right? Is that kind of how to think of it? Is really understanding that channel versus the content that you push through that channel.
Yeah, and then just another recognition for people is that generally the creation of the content is like a minimal cost of the overall thing, right? Like I can produce this podcast every single week for a year and it's still going to cost less than your cheapest trade show booth. Like it's very inexpensive. And so the content creation is not where the costs are. It's in the advertising costs and the distribution and the people that manage those things. That's the real cost, not the content creation part of it. And when I've encouraging go-to-market leaders, I've been screaming as loud as I can around it of like, focus on the places where the most money gets spent first, and focus on those areas and figure out how to measure them properly. And that's how you get the biggest gains in terms of insights. And meanwhile, they buy all this technology to measure 5% of their investments that they put toward brand. And it's like right here sitting in front of you is 95% of your investments, and you can't measure those. Why don't you start there? And I think the same thing goes as finance thinks through the same thing. I think the same principles apply. Like start And when you look at it, the cost to actually create the content is relatively low. And so that would be some of the things. Obvious, well, maybe it's not obvious. So when you match and you have a message that resonates with your target customer, that goes through a medium that fits the distribution channel, that's put on a distribution channel where your target customers and current customers see it frequently and actually consume the message, and you have those three things together on an organic distribution channel, it is by far the highest ROI thing that you can do in marketing, because the costs are very low and the impact and trust and credibility is incredibly high. And so that's what you're aiming for long term. That's what I aim for every time I go for it. And then after that, when I have those three layers working and people love my content, then I take the content they love and I start running ads against it to the exact people that I want to see it. And so the difference between organic and paid is just simply, can I guarantee that the people that I want to see it will see it? Organic, no. Paid, yes. And so like organic goes more broad, but it proves that the content works and the medium works and the format and message work. And then once it works, then I move it to paid. Most companies take their organic and paid team and split them apart, and there's no synergies around it. And the organic team posts about their company picnic and like celebrating Valentine's Day and bullshit like that on their company organic social media. And the paid team runs ebook. Here's our ebook. Come download it. Come get a demo. We'll give you a gift card if you have a meeting with our sales team. All this performance marketing. And they spend $1 million and don't get an appropriate ROI on it. And really, it's the blend between the two. But I think you should force organic content to work first, and then just use paid to boost the awesome organic content to exactly who you want to see it.
I mean, to me, that makes a lot of sense, right? Because you're doing it at a much lower cost to confirm it works. Then you're just making sure the right people see it.
Seems logical, yeah.
Yeah, I mean, the way you explain it seems very logical. I mean, obviously, as I do marketing, often trying to find the right people. I haven't done any paid for my business yet, or very little. But as I'm sitting here and as we're talking, it makes me think of some of more of those paid areas of, okay, this content's hitting. I really should go find more of my tribe, so to speak.
Yeah, and it stems from the siloed, outdated thinking that comes from the marketing department, which is like, oh, we do organic social media for brand. Like, oh, that's why we talk about our company picnic and we like promote the holiday that we're doing, and we talk about shit that our customers don't care about and nobody likes and we don't get any engagement on. And then we have the demand or the performance marketing team over here, and they're just supposed to get leads. And then they just go over and they pound leads. And it's like, if you just rethought the whole thing, you would come to the same conclusion that I did. Prove out our customers love this, and it's focused on what they need to hear to either buy or renew with our business, and then make that be able to work, and then just use it on paid. And the reason is because most companies run paid advertising on content that isn't tested. And when you do that, you don't know. Why is the reason this isn't working? Is it because the content sucks? The message wasn't right? It was the wrong format or medium? We didn't target the right people? It was the wrong distribution channel? There's a million variables as to why the advertising doesn't work, and you don't know because it's not tested. And when you prove the content works, there's only two variables that can go wrong after that when you move it to paid. We didn't give it to the right people, or we didn't run it against the right objective.
Yeah, makes sense. I mean, it goes back to, right, a lot of marketing, we do testing. It's testing it in the right order so you can control those variables. Because we all know how many variables any experiment can have. It's so hard to experiment in the real world because you're like, okay, did it fail because of this or that or this or that? So the more you can remove variables, reduce cost, you've reduced risk. I mean, that makes a lot of sense to me.
And then I got one more thing for the finance department, because a lot of the particular on this topic, and the reason is because most people that I talk to are like, how much pipeline are we getting from our podcast, right? Or like, how many leads did we get from our podcast? Or replace podcast with whatever, brand, organic channel, and that's the same question that gets asked. And I'd like to offer a different perspective from my seat, which is that the reason that I do this is not because of pipeline and leads. It's because it drives my business strategy, and I can talk through why and how it impacts it. And pipeline, that new customers, just become a byproduct of the things that I'm getting and doing. So especially early stage, but this can work across all stages, you need someone that is a a expert in your industry that has trust and credibility with your audience and has significant financial interest in the business succeeding. So if you can match those three things, you got the person. If you can't, you got the wrong person. Okay. So I work with customers in my business, and I did when I ran the $20 million agency too. So I'm working with customers. I'm seeing what's working and what's not. I'm seeing what problems they're having, what questions they're asking, what things they're trying that aren't working. I see the patterns, and then I take them and I start talking about them on the podcast, and I talk about them and bring them up and, share what people are trying, how it's not working. Most of the time I invite a live audience. I just did it an hour ago. So now there's 50 or 100 people that are the right type of person that's going to buy from my company or refer people to my company. I'm sharing the information, and they come back and say, oh yeah, but I can't get this to happen in my company because of X. And they bring up objections. They ask deeper questions. They say, I didn't get that. Can you explain it to me differently? And all of a sudden, I'm basically getting incredible market insights every single week about exactly what's going on with my customer. And then I can start to architect the product, the sales message, the marketing strategy based on what I'm hearing from these people. And you can see the whole thing. So that's the reason why I do it. And then it just so happens that 165,000 people like what I'm saying because I'm actually in the work with my customers fixing the problems. And so I have 165,000 followers on LinkedIn, and I get 10 or let's see, how many episodes do I do a year? 150 times 10,000. So 150, 1.5 million, 150,000, whatever the math is on that, listens to my podcast every single year. And that has driven for my businesses more than $50 million in new revenue between that one thing. Listen to it, listen to what customers are saying and doing, talk about it on a live event, make the live event a podcast that gets published 1 to 3 times a week, and then post the videos from the podcast onto LinkedIn. And that's been our main acquisition channel for the past 5 or 6 years.
Got it. No, I appreciate you sharing. I loved how you kind of broke that all down, and it really started with, okay, understand the problem, talk to people about the problem, put it out there in the right channel, and watch people start to talk about it, and eventually generating, leads and business from that.
And the most surprising thing for me recently is that I found that it has a greater impact on customer success and retention than it does on pipeline.
The podcast?
The podcast, yes. That my customer, I'm single threaded in a customer, right? So I'm just working with the CMO, or I'm just working with the CFO or the CEO, whoever, and they share the podcast with their chief revenue officer or some other C-level executive. And then all of a sudden, this person now says, oh, this makes a ton of sense. And then they renew with us for another 12 months. So they take a month-to-month contract and sign it for annual. Or they say, hey, we need your help in the marketing side. I know you're helping finance. Let's double our retainer and work with you over here. And like that type of stuff doesn't get, and the only reason I know that is because I sit on the sales calls and the customer says, hey, I was listening to your podcast. I shared it with my chief revenue officer. Now he wants to know. It's the only way that you would know is if you sit on the sales call. And so I think that is also very especially for most developed businesses, when you're above definitely by 50 million ARR, you're going to get more growth from your customer base usually than from your new logos, or you should. And so at some point, like that becomes a scaled, highly cost-effective way to bring your message and drive your customers to share it, have more people align with your message, to renew more frequently, rather than having a CSM try to get a meeting and do a QBR. And you should do both, right? But it's just about where do you get the most return on your time, and having one of your smartest, most educated, most credible people talking in a way where millions, there's no constraint on how many people can listen to the information. It just creates more scale than having one salesperson pitch or having one CSM do a meeting. There's more scalability to it.
Yeah, no, for sure. When you can take a whole room at a time and then distribute it, then push that out to, lots of people with that same problem, was a lot quicker than one sales guy trying to hold 100 meetings to get that same distribution or same reach.
Exactly. Yeah, and then let's do one more thing on content, because you can break content into two other areas. It's a different dimension, and this maybe is more on the distribution side. But there's content where you wait for somebody to come and find it. And then there's distribution where you say, you need it, I'm going to go out and get it to you. And so most companies have lived in this world of search engine optimization where they just build a blog and then they hope someone searches the term where the blog pops up, right?
Yep.
And a lot of people that search the term that the blog popped up are not qualified to buy from your company. And so, yeah, you have 5,000 searches and you get traffic from that keyword, but the keyword is like free business template. You know what I mean? And like, it's like, okay, we're selling 100K SaaS. Like the people that are searching for this term and downloading our template are not qualified to buy from us. So you have people where you sit around and wait for people to find you. Best strategy for companies that have a freemium model, product-led growth, low ACV, can't afford sales reps, need some high volume self-service motion typically. And then you have the places where you're going to go, I know who the people are, I have this piece of content that they need to see, I'm going to go out and get them. Great for higher ACV deals where you can afford advertising, you have enough room of cost of acquisition, you have a well-defined account list of 100, 10,000, somewhere in that range of accounts that you know are the right people to sell to. And instead of waiting for those 10,000 to hopefully like stumble upon you, why don't you just go out and get them? It's actually, when your account list is defined, the cost to go out and get them is actually quite affordable relative to every other expense in the go-to-market. And so having that distinguishing too, which is basically a function of TAM and ACV, which are generally correlated as well.
I love what you said there of, hey, when you know who you can go out and target, it becomes much more efficient from a cost standpoint, right? If I have that list of here's the 1,000 that are most likely to buy and I know how to target them, then go do it. You got to make sure the content works and that message is there first. Don't just do it without having done the testing, as we kind of talked about earlier, but it makes sense from a cost standpoint. That's a lot of good advice for, finance professionals, marketing, everybody. I think the more finance, talks to the marketing people, tries to understand these things, the easier it becomes to sit in those meetings and understand what they're doing and to at least weigh in at some level. Obviously, we're never going to be the expert or we wouldn't be in finance.
I don't know.
Is the general rule.
I disagree with that personally.
Hey, go for it. Let me, why do you disagree? I'd love to debate this a little bit.
Yep. So every single revenue leader, maybe not every single, maybe I'm exaggerating, most revenue leaders that I talk to that admit that they have a problem with this, they have 3 questions they want an answer to. What are my highest performing investments and how can I squeeze more juice out of them?
Yep.
Number 2, where should I invest my next dollar to drive the most growth and efficiency? And number 3, what are my lowest performing investments that I should cut or stop? And when you look at those 3 questions, the thing that connects them all is that it's a measure of return on investment.
Yep.
And frankly, CMOs and CROs don't know how to process finance data and calculate return on investment. They don't have a good process for it. Most of them don't have the acumen for it. I'm not talking down on anyone. It's just the truth. And so I've come to the conclusion that this is, and when those questions all revolve around ROI, that this is a finance problem that negatively impacts marketing and pipeline creation, and then sales needs to live with that problem and deal with it. And so when you look at it that way, I think personally that finance could step up and own this problem. And I think that they are the best equipped in the company to fix it. And I believe that not being weighed down by the 10 years of nonsense that marketing leaders and sales leaders have been taught and executed for the past 10 years is a strength, not a weakness. And I think people with fresh eyes would see the flaws and the assumptions that people have that are totally just out of this world. Like I walk into it, I'm like, what are we doing here? And I'm trying to put this, empower finance leaders that, maybe you're not going to be the expert in how to run advertising. Maybe you're not going to be in President's Club selling deals. But when it comes to measuring the return on investment, I think that you could be the people that are the best at it. I think that you could be the function that changes this for the company.
And I get that. That makes a lot of sense when you explain it that way. And I get what you're saying. Yeah, being that expert on really helping measure the ROI and help ensure we're really doing those things that every CFO wants, knowing where to invest, where not to invest, and how to get better results out of our investments, right? We all want that. And the better we can help measure things and really understand it so we can have those measurements, the better we can ensure good decisions are being made. Because that's what I think everybody wants from FP&A. I heard someone say it, finance should help the business make better, faster decisions.
Love that. Yep. Better, faster, more confident decisions. And I'll
Yep.
just give another hint on this pursuit. Don't listen, be curious and understand what those people are doing, but do not listen to what the revenue leaders say about how to do this. You will get led in the wrong direction 100% of the time. This requires a complete rethinking of the process. I gave you some hints along the way, but as like just thinking, oh, these people are good at marketing and they figured out how to run sales, I guess they're going to be able to inform me about how to measure the ROI of things. You will be sadly disappointed. You should start with a blank slate, understand what is happening today as context, and then find all the holes in it today. I pointed out many of them for you on this episode.
Yeah, no, a lot of great advice. I know we're kind of coming up near the end of our time to wrap up. So I want to ask kind of a couple standard questions we ask just to get to know you a little bit better, and also a couple around FP&A. So this is one we ask all our guests just to see the different kind of answers we get. I'd love to get your perspective, not being a finance person. What do you think the number one technical skill that FP&A professionals need?
First off, I do consider myself a finance professional in many ways, and I think that I have a lot of skills.
Well, I didn't mean that as
I know. I'm totally joking with you.
Give me a hard time. Fine, be that way. Ouch.
I think that there's some combination of curiosity combined with curiosity can drive. Am I curious about what the other teams in the company are doing? Am I curious about what our customers are doing? So I think that's one big one. I think that FP&A is going to get totally changed by AI. Like, how do you figure out how to be a leader in your company?
I thought we were going to go a whole episode without an AI discussion. I was almost there. Actually, I was just thinking that in my head. I was like, we haven't even talked AI. Then not.
There's no way. We just can't. It's all numbers. It's literally all numbers. It's going to be.
Keep going.
Yeah, and it doesn't mean the function's going away. It means you're going to get 1 trillion times better at doing the most important things because you know how to use it.
I like a trillion. That's a good number.
Yeah, so I think that it's undeniable that something's going to happen there in this function. And I think that I'm not getting the right word here, so I'll say it for lack of a better word, but like aggressive. The things that frustrate me as a CEO about the finance leaders that I've interacted with is that it's very risk averse. And
yes.
it's very safe. And I think that obviously we need a balance. I think that FP&A plays in a different space than the people that are responsible for risk mitigation in the company. I think FP&A is more equipped to, not aggressive, playing offense, let's call it that. There's some people in finance that need to play defense. FP&A, I want playing offense at my company. I want ideas. I want new routes, the angles that I haven't considered. Those are things that I want.
Got it. I like that. So make sure FP&A is offensive. I mean, offense.
Offense.
All right. And then what's the soft skill we need? You're going to say a softer human skill.
I think curiosity is one that I'm working on myself, but I think that curiosity is an important one for people like us. Like I consider myself like finance. I think in numbers. I think in logic. Oftentimes I see it of like I've gotten better at this over time, but a lot of times it's black and white. The number's 1 or 0. You know what I mean? I think there's a lot of gray in the real world.
Definitely a lot of gray, and I love the curiosity because you can't be great in almost any job without being curious. Any that requires a lot of thought and strategy. I mean, if it's a process-oriented job and all you're doing is the same thing, okay, sure, you could be great. But you know, the jobs we're talking about. Right. So we'd love to get to know you a little bit more kind of personally, Chris. So tell me a favorite hobby or passion. What's something you love to do when you're not working?
I don't know. It's weird. I'm struggling to answer the question because my business life and personal life are now like one and the same. I've run business. I'm an entrepreneur. I've run businesses for 6 years. I make my own schedule. I have my own team. If I go on vacation, if I'm posting on social media, it's part personal and parts business. It's just, I don't know. It's just like all blended together. But something that I'm passionate about is like sharing the wins and the losses and the lessons of my journey as an entrepreneur, in hopes that I wish that I had someone like me telling me all this stuff 6 years ago. I would have avoided a lot of mistakes, things that were, painful, but with pain comes a lot of important lessons. So I don't regret anything. But I, share a lot of recently share a lot of the things that I haven't gotten right in my companies and where I messed up and what I learned. And I have a lot of passion for sharing that with people that are where I was 5 or 6 years ago in their entrepreneurial journey. I do speaking events, produce content on, this is like sort of buttoned up for the C-level executive, but I also produce content in other channels that's, in different areas and more vulnerable for the, entrepreneurs doing 30K a month or 50K a month and have one employee, So that's been somewhere where I get a lot of energy and have a lot of passion. I love to work out and I love to travel.
Cool. Yeah, I know that when we started, you'd mentioned you'd gone travel here recently, so I know you enjoyed traveling. Got one more, and then we'll wrap up here. If you could have dinner with anyone in the world, could be dead or alive, who you taking to dinner? Who you picking?
A lot of people aren't going to like this answer, and it's not groundbreaking, but well, maybe there's two. I'll just go with the one that came to me. I would love to go to dinner with Tom Brady, just because I think it would be. I grew up since I was like 8 years old, going to those games, seeing him win Super Bowls. I just think it would be cool. Like there's nothing more like, oh, he's going to say something that's going to change my life, or I'm going to learn. Maybe I probably would learn something. You know what I mean?
Sure.
But it's more so just because of I was just been a kid watching him win 7 or 8. I think it was 7 Super Bowls.
So who's winning this next Super Bowl? The show will come out after, so we'll see if your prediction's right.
Great. I'm not a betting man, but I'm not betting against Patrick Mahomes.
I'm with you. I'm not a betting man either, but I'm not taking the other side of that bet.
I got Chiefs for the 3-peat. I think when it comes down to it, Patrick Mahomes makes the big throw, makes the big play. Andy Reid, they have a great kicker. I think they just have the things they need to win. They just won the close game by 3 points in the last game. I think they just have what it takes to win the close game. And that's why Tom Brady won 7 Super Bowls.
No, I'm with you. They got a fabulous coach, great quarterback. They know what it takes to win close games, and it's hard to bet against that. I'm not doing it. I like my money. All right. So last question, if our audience wants to learn more about you or potentially get in touch, what's the best way for them to do that? Is it LinkedIn or?
Yeah, probably LinkedIn. If you liked what I said and you're interested in about how my company Pasetto can help you, feel free to visit pasetto.com. There's a place where you can book a call with me. But yeah, if you're just interested in learning more, you want to send me a question, you just want to tell me the episode was cool or that you hated it or just give me some feedback, feel free to shoot me a message on LinkedIn. You can find me Chris Walker. The URL is Chris Walker 171, but you can just search Chris Walker and find me.
All right. Well, perfect. Thank you, Chris. I appreciate you carving out some time. Enjoyed chatting with you today, and good luck with your message around go-to-market. I know I learned a lot. I look forward to kind of listening back to it because there are a few things I'm like, I got to listen to that again. I hadn't heard it that way before. So thank you.
Awesome. Yeah. Thanks for having me on. I hope I get exposed and invited to more finance podcasts. I think this is fun. I think the blend between these two is really important. So thank you for being the first one to invite me on.
Well, you're welcome. I'm glad to be first. I do what I can. Finance podcasts are fun for me. What can I say? I'm a nerd. Thanks, Chris.
Thank you. See you later.
Thanks for listening to FP&A Tomorrow. If you enjoyed the show, please leave us a 5-star rating and a review on your podcast platform of choice. This allows us to continue to bring you great guests from around the globe. As a reminder, you can earn CPE credit by going to earmarkcpe.com, downloading the app, taking a short quiz, and getting your CPE certificate. To earn continuing education credits for the FPAC certification, take the quiz on Earmark and contact me, the show host, for further details.